Hello, everyone, and welcome back to the Traders Mindchat Show. We took a little break last week, but I'm glad to be back because today the timing couldn't be better. What we're talking about today is real. What we're talking about today is common, and what we're talking about is crucial if you want to stay in this game long term. So, before we dive in to all that, let's warm things up for you. For those of you that are joining us here live, welcome. Let me know where you're tuning in from. Drop your city into the chat or just drop a little hello in there to let us know that you are joining us live. And hey, while you're at it, tell me how you would describe this current market in just one word. I'll read a few out loud in just a second. And also, we've got this cool thing that StreamYard is providing to let some of the comments come in on the screen. So that'll be cool to test out. So you guys try that out and we'll see how that goes. Oh, well, Caleb from Holly Springs, North Carolina. That's how it shows, a little tiny thing in that corner. Very cool. All right. So today we're going deep on something every trader faces eventually. That moment when the market feels irrational, to say the least. You've done your homework, you've set your stops, you're in the trade for all the right reasons, and then all of a sudden, boom! Some headline drops. Maybe Trump decides to tweet something just before the market's ready to open, and it tanks the market. The pre-market goes wild, and suddenly everything feels out of your hands. I had a conversation this past week with a trader. Very solid guy, making good progress. He's been having his best month in a very long time. He was following his rules, managing risk, trimming into strength. He was up 5 figures already on the month and finally feeling some momentum. And then all of a sudden this political stuff happened and, well, things change and change very rapidly. So the market reacted, or perhaps it overreacted. And all of a sudden, his stops were at risk. And at least momentarily, his confidence, well, it waned a little bit. And the worst part was that he hadn't done anything wrong. If you've ever been in a trade like that got wrecked by pure, let's call it market noise or market nonsense, drop it in the chat. Let me know. Just like raise your hand or do something in there. Say yes. Just type in a Y into the chat to say yes if you've been in a trade that got wrecked by pure market nonsense. You're not alone. So let's unpack it. All right. So one of the hardest truths to accept as a trader is this: the market does not behave rationally. It behaves emotionally. And it behaves emotionally, especially when headlines hit, especially when it's overnight, and doubly so when it when it drops the morning of. When something unexpected crosses the wire, the market reacts first and then it thinks later. This is why new traders and even experienced traders can get crushed. And this is why people with brilliant theses still lose money. The price action you see on your screen isn't always a result of some sort of deep logic. A lot of times it's fear. A lot of times it's the algos or just a position that is unwinding. Let me tell you a little story. A few years back, I was holding a position into earnings. I don't typically do that anymore unless if I have a nice sizable cushion going into earnings. But at this point, I was holding into earnings. And at that time, I thought that I had an edge. And back then, I was thinking, well, this company was beating estimates. It had solid guidance, the fundamentals, all those canceling qualities, those all look great. And then, you know what happened? I bet you could probably guess the market or the stock gaps down. And why? Why did it gap down? In this case, it gapped down because it turns out that the executive made a slightly cautious remark during the earnings call. That's it. That's it. The whole move was emotionally driven. Panic, hurting, algos sniffing out that weakness. I had a stop in place. It got triggered and I took the loss. But emotionally it hit way harder than it should have. So now I treat market reaction as noise until structure confirms otherwise. And so that's why I keep tight stops. It's why I reduce size and I only trade my best setups, especially when the market is unstable like it's been these last couple of days when we had that outside negative outside reversal bar. I believe that was on Wednesday. So let me ask you, what's your approach when the market starts reacting to news instead of logic? Do you sit out? Do you tighten up? What do you do? Drop it in the chat. I want to hear what's working for you. Let's see some of the comments from earlier. Yeah, there's a lot of people in here that are saying yes, that they've experienced this kind of market. And Caleb, I'm glad to hear that your position's recovered. So here's the key. Your edge is not in being early to the game. It's not in being early to the trade. It's in being consistent. It's in being consistent. You don't need to catch every single move. What you need to survive is you need to survive the noise. You need to survive the noise so that way you can strike when the signal returns. And when the market is very choppy, like it's been these last couple of days, it could be very tempting to try to do more than what's necessary. We don't need to catch every single move. Survive the noise and strike when the signal returns. Now let's go deeper because this is really where so many traders spiral. This trader that I mentioned earlier, after the news hit and things started to look shaky, one of the things that he told me was that if I can't make money now, maybe my whole process has been a waste. Does that sound familiar? Is that the voice that shows up when pressure rises, when fear meets frustration, and you start feeling like this market, maybe this market owes you something? Here is what pressure does. This kind of pressure, it makes you question your wins? Did you really earn those wins? Were those wins just luck? Were those wins fleeting? It starts to convince you to chase something that maybe you've already missed, and it starts to turn discipline into desperation. How do I know all this? I know all this because I've been there. Years ago, I remember having sensational month up about 14% on the month. My best month at that time. Then came a headline and market wobbles just like it still does, and that trade went against me. And instead of walking away with a profit, I tried to do what I could to earn it back, trying to get back in, catch the bounce, do more than what was necessary, doubling down. Took trades that were outside of my system. And of course, one thing leads to another, and I gave back all the gain plus a little bit more. So let me ask you this, and be honest. Have you ever given back profits by pushing too hard in a volatile market? Type into the chat, guilty, if that's ever happened to you. In fact, I'm going to come over here and I'm typing in guilty as well because that's something that I've done in the past too. What I told that trader and what I'll tell you is this. You're not here to prove anything. You're here to build something, and building takes time. Building takes patience. Building takes awareness. Sometimes the right move is not making a move. Sometimes the right move is actually sitting with the discomfort, sitting and waiting. Winning isn't about forcing opportunity, it's about protecting the foundation you've already built. It's about being obedient to the process. Now let's talk about what actually gives you an edge in this kind of a market. Spoiler alert, it's not your ability to predict the next headline. So it's your ability to prepare. Your ability to prepare. The traders who survive and thrive through irrational markets, kind of like the one that we're in, are the ones who know their risk ahead of time. Right? So how do you know your risk ahead of time? Well, it starts off by figuring out where you're going to enter ahead of time, where your stop loss is going to be ahead of time, what your position size is going to be ahead of time. That's just the start of it. You might also want to think through how many trades are you going to put on? So how much risk are you willing to carry overall? This term that I like to use is called portfolio heat. If you put on, let's say that you start off with one trade and you're risking 1%, that's all well and good. But how many additional trades are you willing to add? If you're willing to add 3, 4, 5 more trades, does that mean that all of a sudden your account is at 5% risk? Everything hits all at once and you set for that kind of drawdown? How much risk are you willing to take ahead of time? When you're setting your stop levels, are they set with intention? Have you thought through where you're going to place your stop? Is it something like a blanket 5% stop. Wherever I enter, I'm gonna sell if it falls 5% from here. Is it something perhaps a little bit more technical? Something to do with the chart? Maybe some sort of an indicator? Maybe it's something else, Matt. Maybe for you it's story driven, but whatever it is for you, is it pre-planned ahead of time? And finally, here's the third thing. You don't need the market to validate you in real time. That's the kind of trader that is able to survive and thrive. They don't need the market to validate them in real time. The reason why is because they have not just their trading plan for this individual trade, but because they have their system, what I like to call a business plan. They've already thought through how they're going to manage not just the risk on one trade, but manage the risk in their overall portfolio. They've already thought through how they're going to manage the trade, how they're going to lock in profits. They've done all the back work so that they know that it works. They're not just theorizing that the actions that they're taking will work. And when adversity hits, they know how to respond. And they're not really concerned with, well, what if price all of a sudden goes against me? Or if I take this action, let's say I sell, and then all of a sudden the market rallies in my face, and then I feel like a fool. Well, that's not a thought that crosses their mind, because what's foolish in their mind would be not following their plan. So by following their plan, they're acting wise. By not following their plan, that's the thing that would make them foolish. Does that make sense? So here's one more question that I asked this trader, and I'll ask you guys now. If Tuesday opens, say Tuesday opens 3% down. Monday is Memorial Day, so it would reopen on Tuesday. So if Tuesday the market opens and it gaps down, say 3%, what would you be proud to have done today? Think about that for a minute. Because that's the mindset that creates conviction for the chaos. What would you be glad if you raised your stops? Would you be glad if you trimmed your size a little bit for the long weekend? Would you be glad if you sat it all together? This question of what will I wish I would have done can really save your account. Can save your account, can save your financial account. It can also save your mental account. So let me ask you one more thing. When you last adjusted a stop, was it because of structure or because of emotion? Go ahead, type that into this chat. Was it structure or was it emotion? No shame either way. We've all been there. We've all are dealing with these kinds of things. I'll tell you this. Whether it's structure or whether it's emotion, this is where some of that tension might be. We think real-time decisions define us in some way, but it's actually the pre-market planning that defines our consistency. Your job isn't to start to guess what's coming. No, your job is to know what you'll do when it does. So how did this trader's story end? At least for now. After all that fear, all that doubt, he actually did stay with his plan. He raised stops, he trimmed, he let a few winners keep on running. And then later on, he eventually sent me a message that said, "This time is different because this time I'm not giving it all back." He was able to lock in a lot of his gains. And quite frankly, I'm very proud and happy for this guy. I thought, here, here it is. That right there, that's the shift. It's not about trying to press harder. It's not about trying to max out every setup that comes along. It's about protecting what you've earned. My friend Mark Minervini likes to say, yesterday's profit is today's principal. If you don't protect it, then is it really yours? The answer is no. So here's another question. Type this into the chat. How are you protecting your profits this month? What's one rule or maybe one habit you've leaned on? Type it in. Let's share some edge. Whether it's a tighter stop, smaller sizing, or simply walking away when you're not entirely clear. Those are the choices that actually build a track record. And those are the choices you look back on with pride. Let me leave you with one more thing before we jump into the Q&A. And if you do have questions that you want to discuss right here and now, start getting the chat ready. Start putting those in. I love doing the live Q&A sessions of these live streams. It's my favorite part. So we've got a bunch of people here already. Go ahead and start typing it in. But let me give you one more thought before we begin the Q&A. In markets like this, the best move might not show up in your chart. It might be the decision that you don't make. It might be the trade that you skip. That's what I mean. It might be the size that you cut in half. It might be the profit that you take early because clarity on that trade is fading. You don't need to be perfect. What you do need to be is intentional. You don't need to catch every wave. You need to protect your energy. You need to protect your capital. You need to protect your conviction. So when the real opportunities show up, you're not in recovery mode. You're ready. So the next time the market feels, I don't know, maybe a little irrational, take a breath. Zoom out. Ask, what would I be proud to have already done? Let that question guide your action. And if today's episode hit home with you, drop a little fireball in the chat. And if you know a trader who needs to hear this, go ahead and send it to them. Let's build this community around real trading, real mindset, and real growth. We're not just trading here. We are building one disciplined decision at a time. And with that said, let's dive into the Q&A. Just reading some comments here from Caleb. We need to protect our mental capital. I'm spent today from the market and from family things. It all works against you sometimes. I totally agree with you. And we do need that space to be able to recharge. If we create it, if we build into our plan time to recharge, then it makes the whole recharging process that much easier. And that's a hard truth that I learned the hard way. I've one of the biggest weaknesses that I have, and I was actually going through some old journals. I found old journal, and I was going through some of the notes this morning, and I can't say that I was surprised, but I kind of saw the same sort of patterns repeating for a very long time, a little bit longer than I'd really care to admit, probably close to, I don't know, maybe a year. And a lot of it had to come down to trying to force too much in at once, trying to force too much in, trying to stretch myself, trying to really get more done than what was reasonable in my trading, in my business, life overall, trying to fit more stuff in, trying to work ahead. These things sometimes these things can sound, I don't know, like almost like a false sense of humbleness, right? It's like the guy that goes on the interview and says that, oh, well, and they say, what's your biggest problem? And you tell them, oh, my problem is that I work too hard. that 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 actually can be a bit of a vice, because if you are trying to fully optimize every single moment and not give yourself a break, then the system falls apart under any amount of stress. It would be as if you're driving a race car, and you're driving this race car. It's going around the track, and you could go for a pit stop, but you say, "Ah, you know what? I still have some gas left in the tank. Let me keep on going." And then all of a sudden, you're halfway around the track on the next one, and you start to run out of gas. These pit stops that we could give ourselves during the day, these breaks, they're necessary so we could keep on going. So that way we could keep on performing optimally. This idea, this notion really changed my entire outlook on taking breaks and building these kinds of breaks into my day. Some of these breaks could be anything. It could be spending time with kids. It could be going for a walk. It could be prayer. Whatever is going to help to re-energize you. Try to put something like that in the middle of the day. It doesn't have to be long. It could just be 15 minutes, but something that helps give you that break, give you that refresh. Uh, that's something that's actually helped me out quite a bit. And Caleb, thank you. I see that comment. Yeah, totally unsolicited. No, it really was. But Caleb, I appreciate you for saying those kind words. Thank you. All right. So if there's any other questions or comments, let me know. Final shot. But we are at the end of the hour. So I'll take a quick drink here and I'll see if there's any questions that pop in by the time I'm done. And if not, we'll call it a day. It's really great seeing you all here today. We had a very live, a lot of people showed up to this live stream, and it was great seeing you all. And I look forward to seeing you again next week. I hope that you have a wonderful Memorial Day weekend, and I'll talk to you again real soon. Take care, much love, and God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.